Well, hello out there. My name is Andrew Schneider. I am the Director of Operations for Wyoming Arts Alliance. Very pleased you could join us for this session today. I want to make a couple quick introductions. Joining us today, we have Amara Faring from the Wyoming Arts Council. We have two board members from the Arts Alliance here who are also alumni of the Arts Council, Rita Basom joining us from Cheyenne, and Bruce Richardson joining us from Casper. Our topic today is building your success team with a focus on financial planning, bookkeeping, and taxes. In a previous session, we shared the idea of building a luck circle. And so in today's session, we're going to continue to focus on building your success team. As an artist or cultural professional, there are any number of people that you may want on your team to help sustain and grow your work. So in this session, we're going to focus on 4 interconnected areas that are relative to the business of arts and culture: bookkeeping and accounting, taxes, financial planning, and legal entity formation. Today's panel is comprised of 4 Wyoming experts who are giving their time to help sustain Wyoming's creative communities. And we thank you all for being here today. Of course, they represent a much larger group of professional services experts around the state that you can call upon for support as you build your own success team. And that's true whether you're an individual artist or performer, a small business like a band or a frame shop or a dance studio, a nonprofit like the Arts Alliance, or any other kind of entity. Today, each panelist will introduce themselves and explain what they do for the arts and culture individuals and entities in Wyoming. Then we will pose some frequently asked questions to them that have come from our members and partners on topics ranging from tax deadlines and filing requirements to proper bookkeeping for grants and more. So with that, our guests today are bookkeeper Karen Ewert of Pepper Tank, who also works with the Nicolaysen Art Museum here in Casper. We also have with us certified financial planner Jess Ryan of Raymond James Financial. We have a certified public accountant on our panel today, and that's Caleb Snyder of MHP. And we're very glad to be joined today by attorney John P. Fritz of Hearst Applegate, LLP. And so with that, I will turn it over to you, Karen, for your opening remarks.
Well, I started my bookkeeping business in 1981, and I do a lot of work for nonprofits as well as for-profit businesses. I've been working with the NIC to help them with their bookkeeping for probably 30 years. And that's my story.
Great, and let's just keep going down the line then. Jess, you want to chime in next?
Good thing. Good afternoon, everybody. My name is Jess Ryan. I'm a certified financial planner here in Cheyenne, Wyoming. I primarily work with individuals and nonprofits on coming up with financial plans and managing investments. So that's everything from somebody that's just looking to save some extra money and build wealth over time to a small business or a nonprofit looking to start a retirement plan or manage an endowment. I'm a big believer in the team approach to all this. So working with CPAs, attorneys, bookkeepers, the list goes on to make sure that people's financial plan is as complete as possible and that nothing's being missed. That's kind of my big focus. I really appreciate you all having me and look forward to the questions.
Thanks for being here, Jess. Caleb.
Hello, everyone. My name is Caleb Snyder. I am a CPA. I work with MHP in Cheyenne. Obviously, I'm not in Cheyenne at the moment, but I've been with MHP for about 7 years now. We do everything from large businesses, C Corp tax returns to individuals And depending on what type of entity you guys might set up, there's different options and different deadlines and things like that you guys will have to pay attention to. Yeah, other than that, that's it.
Great. And we had some questions, Caleb, that we're going to throw in your corner here shortly. So
sure.
Let's kick it over to John.
Hi, I'm John Fritz. I'm an attorney. Like Andrew said, I'm an attorney in Cheyenne. My practice primarily it's really the way that attorneys describe it. Very confusing. It's called a transactional practice. When you think about different transactions that you have, whether it's a business transaction, estate planning, state administration, all of those things fall under my wheelhouse. If you've ever seen an attorney on TV, that's not what I do. They do all the fun courtroom things, but my practice, like I said, is primarily focused in, first business, helping people, whether it's a nonprofit or a statutory foundation, a corporation, like Caleb had mentioned, the different types of ways that those corporate entities are taxed. LLCs as well, a number of different types of LLCs that we could talk about if you'd like, but really helping people from the formation side. And to echo too what Jess had mentioned, really I'm a huge proponent of the figuring out who your team is. A lot of the background paperwork are things that I do, but really what drives the choices that we make are things that I'm told either by the financial advisor, if we're talking about some kind of succession or what happens after you die, or if it's different elections or the different way that we would structure an entity based on what the tax implications of the business being run through that entity are. So my job works almost entirely with everybody. So from formation to operation and what happens when we're winding up or closing out businesses as well as what falls within my purview.
Well, wonderful. Thank you all for being here today and sharing your knowledge with our arts and culture sector. So the first FAQ that we had come in is a pretty straightforward one. Folks just want to know, what is taxable income? Is there income that is not taxable? Who would like to take this question?
I can take it. So generally, any income that you're going to have as an artist or selling some sort of performance or some sort of art, if that's your primary business, it's going to be taxable. That being said, if it is your primary business, if it is something that you are doing in order to make a profit, there are lots of different things that you can write off that will reduce your taxable income. Where people will occasionally get into trouble, especially in this space, in the artist craft type space, is they don't claim their taxable income. They'll say that basically what they're doing is a hobby. I'm guessing that if you're watching this video right now, you're probably not one of those people, but that would be the one recommendation that I would kind of state, is that if you're doing this as a source of income, you need to claim the income as a general rule.
Yeah, and I would just say that you're probably going to have to fill out a W-9 if you sell a product to if you sell a product to an entity. That is the big thing, is fill out a W-9 and get it back to the vendor.
Great, and I'll add in just a comment on tax-free income and ways to get tax-free income. One way to get tax-free income is by investing in municipal bonds. Municipal bonds are exempt from both state and federal income taxes. If you are in a state that has state income taxes and you purchase a municipal bond that is issued within that state, it can provide tax-free interest to you. Additionally, investing in a Roth IRA, which a Roth IRA is a type of investment account as opposed to an investment itself. That Roth IRA will grow, and as long as it's taken out after 59 and a half and after 5-year minimum, then the distributions from that account are tax-free. So those types of tax-free income come in a little bit more later or towards retirement, but worth mentioning.
Great. And one follow-up here. So I think I understand if you're selling your artwork, what if you're in sort of a service area? Is fee for service income also taxable? And is there a difference between selling a good and selling a service from a tax standpoint?
Generally speaking, yes, it would be taxable as a service. There really isn't a huge difference. The only exception to that, I guess, would be if you're, I guess, trading in art. You would have basically, if you were buying something and then selling it, is a little bit different than if you're creating something and selling it. And the reason that that's different is basically you're going to be kind of taxed on a capital gains basis. Essentially, you're going to basically be able to reduce the gain on your sale by whatever you paid for that piece of art. If you're in the business of trading art, essentially, if you're creating it and selling it versus services, they're virtually identical from a tax basis. But if you are trading, there's going to be some differences there.
Great. And one last follow-up on this one. Is it, maybe this is a myth, but is cryptocurrency totally income free?
No, it is not. In fact, there is a question on every person's 1040 or individual tax return that asks you specifically if you've either received or sold any crypto. So if you buy crypto and you don't sell it, there's nothing to report for that year. However, if you receive it, so if someone pays you a Bitcoin for the service you provide or something that you're selling them, you are receiving Bitcoin, at which point you would have to file that and then essentially recognize that as income.
Great. Does anyone else have anything to add on this question before we move on?
I think the biggest thing that I see is nonprofit entities, especially if they're an individual, mixing business and personal. I would recommend that you try to keep the business side of your art separate from your personal. I would have a separate checking account for your business income and a separate credit card if possible.
Yeah, absolutely. Yep, absolutely. And just to add to that, we do, see some businesses that are intermingled personally. What that does is, one, it makes it a little bit of a riskier tax return, more likely to get audited. Additionally, it's probably going to cost you more because your accountant, your CPA that are doing your taxes are going to have to dig through all of that stuff, and it takes a lot of time to do that. So.
And another thing from a legal perspective is that the entity that you would create to housing your business, if you're mixing the personal work with your business work, or even just having the same bank account that you use personally for your business, I mean, that risks any liability that would normally be protected against the entity itself coming through and actually being your own liability. So always think about when you have an entity, keeping things separate, make sure that only your business gets sued and they can't come after your house as well. So that's keeping those things separate, and having a accountant and a bookkeeper working together is very helpful to make sure that all those things are done the right way.
Absolutely.
Well, I think I'm going to jump down here because our conversation is kind of naturally going to this next question. But and John, I think maybe this one's best for you. But what options exist for entities if I'm starting that business? Maybe I'm the only employee. Maybe it's maybe I have an assistant in my studio. Maybe I have a small retail business or a dance studio, or maybe I'm a performing group. Maybe I'm a rock band and there's 4 of us and we're all in there. So what are the options for setting up those entities, and what is the path for me to get that done here in Wyoming?
Yeah, so believe it or not, the second part of the question is really where I come into it. The type of entity choice really does start with the accountant a lot of the times. So entities, just broadly in Wyoming, most of the ones that you've heard of, you can start nonprofits, which is just essentially a corporation that's taxed a particular type of way. You can have corporations. You can also have an LLC. Really, when we're talking, typically the difference between a corporation, and when I say corporation, I mean something called a C corporation. C just referring to the section of the Internal Revenue Code or part of the code. I guess with an accountant on here, I got to be a little bit more careful. Really we're looking at the type of entity being driven by what makes most tax sense for the business that you're running. So if you're going to have lots of employees, I'm guessing that maybe we'd be talking about something where there's a more off deductions or something else that we can recognize if organized as a C corporation. But 90% of the time when we're talking about small businesses, we're usually talking about LLCs. So LLCs very generally, and I'll pass over to Caleb for the specifics on anything that I miss, but they're called they're typically organized and taxed as a pass-through entity, meaning that all of there's no taxable there's no nothing recognized on the entity level, but instead that's passed through to the actual owner, the members of an LLC. So as far as organizing any of these companies or any of these LLCs, it all happens with the Wyoming Secretary of State. They have different ways of or different essentially boxes that you click. There's an online you can do it through their website to form these entities. But really, that's only the first step in having it registered with the state of Wyoming. From there, really, and that's usually where my work starts to trail off for a bit, and we pass things over to the bookkeeper and the accountant to make sure that they're operating it from a compliance perspective. Looks like you still might be muted there, Andrew.
Thanks. I just wanted to kick it over to Caleb and Karen or Jess if you had any thoughts on this.
Sure, I'll hop in next. I guess it kind of his ending comments kind of lead to where I'm at here. So so generally 90-95% of the businesses that we see in our CPA practice is pass-through entities. And so when you go and get everything filed as an LLC, you've got the option to basically kind of treat that as different entities within that LLC. And so if it's a single member LLC, like if you're the only owner and you want to do an LLC, generally that's basically just going to be reported on your personal 1040, not going to have a whole lot of other things to do. If you've got partners, if there's multiple owners within that, it's either going to be generally treated as a partnership or it's going to be treated as an S Corp. And there's an election that you have to make when you file your taxes with the IRS to make that S Corp election. The biggest difference between partnerships and S Corps, partnerships, generally, you're not allowed to pay yourself as a partner. You can take draws and distributions and things like that. However, on an S Corp side, you have to pay yourself. You, as an owner, you have to pay yourself a W-2 form of payment, essentially. There's some other differences as far as how assets can go in and out of those businesses. If you've got contributions, if you're contributing assets such as buildings or land, things like that, there'll be some significant tax implications in doing that, especially in an S Corp. And so depending on what type of business, what type of things you own, what type of things are part of that business, generally we'll recommend either making that S Corp election or not. And that can be made, like I said, that will be made after the LLC is formed in Wyoming. The other thing that you'll need to do is once that LLC is registered in Wyoming, generally, if it's a single member LLC, it's not a huge deal, but generally you're going to want to get an EIN from the IRS, and you can go online and fill out some information there as well, and have them register and get you an EIN, which is essentially your tax identification number for your business. Yeah, that's all I've got. I think I've got something else more specific. But
Karen or Jess, you want to chime in on this?
Oh, they pretty much explained it, so.
Gotta kill the steam. I'm good.
I would,
Well,
sorry,
go ahead.
I'd add too that one of the things that it's important to make sure that you treat your corporation or your LLC like it's its own business. In order to, one of the things you'll do, or you likely want to do, is to set up a bank account in the name of that entity. In order to do that, the bank will require that you have that EIN that Caleb had mentioned. And so whether that's a part of the service the attorney you hires or not, it will be something you need in order to get a bank account.
Great. So I'm hearing IRS, Secretary of State, bank account, and boy, you better get someone like Karen and Caleb in there at this point too. So let's say I've decided to start a business entity to separate it from my personal income and finances and to protect myself. What then do I need to do? And I've written my business model. I know how I make money. What do I need to do to finance my business? And both from a bookkeeping, accounting standpoint, an entity formation standpoint, and any other thoughts you all have to kind of that step of maybe I need a small business loan to get some marketing materials done to kick the business off, or to take my band on tour. I need to get some equipment for that, but I know I'm going to make it back in ticket sales. Anyone want to jump in first?
I'll start with, I guess, just a little piece of advice, I guess, from my wife is actually a commercial lender, so she does kind of the banking side of a lot of these businesses and stuff that we see. We've got mutual clients and things like that. The one thing that has come up time and time again, right? As a business, you want to reduce your taxable income, right? And so that's one thing that pretty much everybody wants. They don't want to pay taxes if they don't have to pay taxes, right? The problem with that is on the banking and on the lending side. On paper, you might not show any income, even though you're doing fine. You're bringing home money. You're able to support your family, things like that. If you reduce your taxable income as much as you possibly can all the time, it makes it very difficult to go out and get loans, because on paper, right? My wife looks at tax returns on a daily basis to see if you're qualified for a loan. And so that's kind of one thing that you need to think about, is that if you think you're going to need financing in the future, you may have to show a little bit more income. And there's different options in order to do that, as far as like taking bonus depreciation on your tax returns or not, things like that. And so that's one kind of piece of advice that comes to the top of my head, is just make sure that if you're going to need financing, you're going to have to show some kind of income, right? Like, banks aren't going to give you a loan if you have no income. So that's kind of one piece of advice, I guess, on this topic that I'd like to throw out there.
On the same vein, that when you go, oftentimes when folks will go get a loan from a bank, the bank, because the business, I mean, if you're thinking about a business that you've had for a while and you want to go get a loan, the banks will look at your business like they look at you individually, right? They'll say, well, like Caleb said, how much income do they bring in? Are they going to, what's the likelihood that they're not going to pay the money back that I'm giving them? We'll think about entities as well. So, Andrew, you talk about what happens if we need to get a loan to start the business. Well, your business is it's brand new, doesn't have any history, it doesn't have any income, it doesn't there's no history for a bank to really evaluate. So, be prepared that when you go to lending institutions and ask for some kind of loan, oftentimes, even though you're going to be looking for it in the name of your entity, the bank will either require that it's guaranteed, meaning that the bank or the entity that you have is signing off on the loan, but so too are the members or the owners of that business, saying that we agree to be personally liable or personally responsible at any time that the business starts to default. So, understand that that's very likely something that the institution may ask for as well.
Jess, do you have any thoughts on the financing end of things and the sort of personal guarantees, or thoughts on angel investors or non-traditional financing?
Yeah, I was trying to piece together my thoughts on how these things usually happen. I mean, oftentimes when somebody is starting a business outright, they're using their own money, which can lead people to draw money from assets that they have. This can include even retirement accounts, 401k from a prior employer, or retirement accounts that they've saved up on their own. Important considerations here are just the costs of accessing that money, the tax consequences. In particular, if somebody's younger than 59 and a half, you're talking about penalties on top of income taxes if it's a tax deferred retirement account like most 401ks and IRAs are. Most of these businesses are started by personal money that somebody has from sale of property or something else, which could be a little different. But the other ways people start these projects is with friends and family, right? Going to the people that they care about, that care about them, and asking them for loans or partnership or anything else. The thing I emphasize with everybody when these things are happening is documentation, making sure everybody knows what exactly the loan looks like for that business, not just so that people get paid back if it is a loan, but also so there's no surprises later on when they go to get some maybe commercial financing from a bank and they need to show this is what ownership structure is, this is what outstanding debts are, and what the terms are for that. But it just depends on the type of business you're starting and how capital intensive it is. A lot of artists don't have a lot of initial costs, as far as materials and things like that. But once you get into retail spaces, once you get into, something like a touring group or something else, maybe there's additional costs that come up. But obviously the big thing I always tell people is use the resources that are out there. Go to the Small Business Council, try to find other resources and help with your business plan, making sure that you're approaching it with as thought out of a plan as possible, I think is one of the most important things. So stress that business plan being in order and being able to really take somebody through that before they invest, so they know what your vision is.
Great. Karen, is there anything you want to add on this topic? If not, I think we can get back to focusing on taxes again.
Yes, no, I don't have anything to add.
Okay. So this next question is kind of a broad one, but what are the different tax deadlines, and what other dates relative to taxes or Secretary of State filings, what needs to go on my calendar as a small business owner?
Sure, I'll tackle the tax related ones first, and then I'll let John talk about the filings for like annual reports and things like that, I guess. So as far as taxes go, generally, I guess it kind of depends. And if you're a pass-through entity, as we talked about before, an S Corp or partnership, something like that, it's going to be basically you're going to want to pay attention to March 15th. We can extend those to September 15th. And then for your 1040, your personal taxes, that's obviously April 15th, and those can be extended to October 15th. In addition to those kind of bigger deadlines, especially if you're self-employed, you're going to want to pay attention to the quarterly tax payment deadlines, which are April 15th, June 15th, September 15th, and January 15th. And so if you are self-employed and you're not withholding W-2 like on W-2 basis, essentially you're going to have to make quarterly tax payments if you have taxable income Otherwise, you'll rack up penalties and late fees and interest and all those fun things that nobody wants to pay. Those are kind of the big ones. If you're a single member LLC, it's just gonna, like I mentioned earlier, it's just gonna basically be reported on your 1040 only on your Schedule C. And so if you're a single member LLC, essentially you don't have to worry about the March to the business deadlines. If you're a C Corp, those are also due on April 15th and extended to October 15th.
Okay, I'm putting this in my calendar now. Thank you. Are there any thoughts for nonprofits relative to those dates and deadlines?
Sure. So for nonprofits, it kind of depends, because you've kind of got it's a little bit different. It's a different form, and so depending on when the fiscal year of the nonprofit ends, we've got basically 6 months to file it, and so it really just kind of depends on if you've got a fiscal year or a calendar year as far as your nonprofit goes. So those ones are a little different. We've got, in our firm, we've got some that are due in May, we've got some that are due in November, we've got some, that are due in February. It just kind of ranges depending on what the end of your fiscal year is.
Gotcha. Does anyone else have thoughts on key dates that folks should put on their calendars?
Yeah, oh, sorry, go ahead, Karen.
Oh, I was just going to say, if you process payroll, your payroll taxes, depending on the dollar amounts, those have to be paid by the 15th of the month following your payroll. And then you have quarter end reports that are due the month after the quarter ends. So that's like April, July, October, and January. And then your W-2s and your 1099s have to be out by the end of January. So.
Yep. Thanks, Karen. I just do taxes. I don't do payroll stuff. So.
The only other thing that I'd say is that well, aside from the business deadlines that I'll talk about, but making sure that, yeah, there's a difference between your tax deadline when the filing is due and when you need to have your stuff to the accountant or to the bookkeeper. Almost always the price for professional services is less if they have more time to work with it. And if you put them on a rush, they have to move things around, that they have obligations for other clients, and you can just save yourself some cost up front, just usually by being a little bit more ahead of the ball. As far as the business deadline, so when you file an entity or you start an entity in the state of Wyoming, say for example that we were gonna file one today on June 28th. So every single year there is a required annual report that you file with the Secretary of State. It's something that almost all of my clients prepare on their own. I think some ask a bookkeeper to help prepare as well. Certainly they can do so. But usually one of those things that you're pretty well able to do on your own. There's a form with the Secretary of State. Honestly, for any questions that you have, if you don't have an attorney or an accountant or bookkeeper or financial advisor, then really looking at the Secretary of State's website is very comprehensive once you kind of get the hang of where things are. But that, again, going back saying we filed an LLC today, and they would be June 1st of 2023. So the first of the month of the day, or the first of the month in the month in which you filed the original entity. So every year on June 1st, I would have to file an annual report. There's also I'm not sure they call it a tax or not, but there's a fee that looks like a tax that you pay along with the Secretary of State's annual report every single year. That fee is either $50 or 2 mil of everything. So 0.0002. If that is more, or 0.0002 times whatever the reportable amount is on that report, whichever is greater, you'll end up paying to the Secretary of State. But off the top of my head, I forget how much you have to bring in an income or reportable dollars before you have to pay anything over $50 $50, but I think I can do that math pretty quick. So it's anything. So when you're reporting something over 250,000.
Great. So this kind of leads really well into the next question, and maybe Karen, this is kind of geared in your direction, but what records should I be keeping on an ongoing basis in order to prepare these taxes and reports that we need to do, both if you're a for-profit business, but then also I know you have a lot of experience with nonprofits and different kinds of grant reports that have their own deadlines. So what records do I need to be keeping to make this easy when the deadlines come?
Well, I run everything on QuickBooks, so and it's pretty comprehensive. Most of what I do for nonprofits is they will give me their bank statements and I will enter all their transactions into QuickBooks each month and reconcile their bank statements. And I encourage them to take their bank statement and tell me what each transaction is for. They know their business better than I do. Obviously, some of them are obvious, like your utilities, but if you use debit cards, some of those descriptions on the bank statements are very vague. So I expect my customers to itemize all the transactions on their bank statement, and then I input all that into QuickBooks. And at the end of the year, I can give a copy of the QuickBooks file to their accountant, and they can process their tax return from there. So, and I guess if you don't use QuickBooks, you can use an Excel spreadsheet, record your transactions on them. And, but I would say the big thing would be your bank statements. Make sure they're all clear and all the deposits are notated as to, what the income is for.
And how about, Karen, on the expense side of things? Are we still keeping paper receipts for expenses and in a shoebox to hand over at some point?
Well, you should keep all your receipts in the event you are ever audited, which chances are slim, but you never know. I've been only audited once in my business, which was a relatively painless thing, but I've heard horror stories. So you should have every receipt available. If you've got a transaction listed on your bank statement, you should have a receipt to back that up, or a check, canceled check.
Does anyone else have any thoughts about record keeping, things that you need to make filing and compliance easy in your life?
It's not, tax compliance, but as one of the formalities that you want to make sure you keep up to keep that liability isolated with the entity and not with yourself. You want to make sure that if you have meetings with people, you have records of having those meetings, of not necessarily with third parties or like that, but company meetings, like what are we going to do? When are we going to make distributions, or what are called draws out of the pass-through entities, and have some kind of, they're called minutes. I don't know why they're called that, but that's what they're called. And so you have a record, essentially a record of all of the things that you've decided to do as the company. So if you ever, if somebody ever sues you, you can say, hey, we had annual meetings. I took a draw on September 1st every single year, and here's my company meeting minutes where I said I was authorizing myself to do that. So kind of, it seems silly when it's one person as the business, because you're saying I met with myself and I told myself it was fine. But still, it's important as far as a formality is at least from our perspective.
That's great to know. And I often sit myself down for a talking to, so I can put that on my calendar as well. Next question, kind of in this similar vein, but what taxes do I need to pay or withhold if I'm hiring somebody or many somebodies as employees for my business?
Well, I'll start. If you hire employees, like you said, they told you have to have an EIN number so you can pay FICA, Medicare, and withholding to the federal government. You also need to sign up with the state of Wyoming to collect unemployment. And if you need to be covered by workers' comp, you have to sign up with workers' comp for the state of Wyoming. And all those taxes are deducted from employees' checks, FICA, Medicare, withholding, and then the employer is responsible for paying unemployment and workers' comp and a match on Social Security and Medicare.
I think that pretty much covers the employment tax. I mean, as far as having employees.
Got it. So then what, from a process standpoint, Karen, I'm hearing that you need to sign up for workers' comp in Wyoming. Is that the name of the agency? Are there other agencies when I have a new hire, both at a federal level and a state level? Can you run us through that again?
And it's mostly at the state level. The Department of Workforce Services handles workers' comp and unemployment. You do have two separate ID numbers with those entities. And you can register to have your quarterly reports filed jointly. So it's one report, but it breaks out unemployment and then it breaks out workers' comp.
Great. And then the last kind of tax related question is really around sales tax. So what do I need to know? Maybe I go to arts markets, maybe I'm at the farmers markets every week in the summer. What thoughts, what do I need to do? Who do I need to file with state and federal for sales tax? Are there licenses for that kind of a thing that I need to get ahead of time?
Yes, you have to register with the Wyoming Department of Revenue to collect sales tax. And I believe nowadays you have to collect sales tax on everything, and you can set your price for $20, and then that's what you can collect from your customer. And then when you file your tax return, you just would deduct 5% or whatever the tax rate is in your county. It's different throughout the state. So you have to know the tax rate in your county. So you can reduce your revenue by the tax that's included in your price.
Okay, great.
That's tax where the sale occurred, right? So a lot of artists will go to art shows in Jackson, art shows in, Rock Springs, Gillette, whatever. And so you'll have to know the county in which you're selling those items as well.
Well, I want to ask if anyone else has any tax related thoughts before we kind of move off in a different direction here and wrap up our conversation.
There have been a couple times I've not been sure if I should chime in on tax deferred retirement savings. I don't know if we're going to get more into that, into an investments or other financial planning side of things. I could talk about a few of the things we talked about as far as deadlines and other documentation, or I could save that for a bit later. What would you prefer?
Actually, that's a perfect segue. I was going to put you in the hot seat here to kind of talk about exactly that.
Okay, great. So for the kind of order that we talked about things already, for deadlines to contribute to both traditional IRAs or Roth IRAs, if you're just wanting to have a plan that is separate from the business, if you're an individual working on the side, you can open up a traditional IRA or a Roth IRA up to a limit of $6,000 between the two every year. And your traditional or Roth IRA could be the full amount, or you could split it between the two. Important thing about these is when you're over 50, you can do an additional 1,000. So tax filing deadline for those is same as your personal tax filing deadline. April 15th is the kind of hard and fast on that, or when you file your taxes, you want to have done those contributions or made specific plans for them, which means it is possible to get a deduction if you're contributing to a traditional IRA on a prior tax year into April. So if I'm looking at my taxes, doing my taxes, and I realize I'm in a higher bracket than I expected, I can still open up a traditional IRA as long as I meet income limits. Other types of retirement plans for employers, business retirement plans, there's a whole different mishmash of names and options on that front, whether it's simple IRAs, SEP IRAs, owner case, 401ks, the list goes on. Most of these should be established before the end of the year, but there are some exceptions for different types of plans. And picking your particular plan that you want to do for your small business really has a lot to do with how much you want to be putting towards retirement. And that's dollar wise as much as it is percentage wise. So if you're only going to be able to contribute 5,000-6,000, then a traditional IRA, Roth IRA makes sense. If you want to be able to contribute more and get a larger tax deduction, then those employer sponsored plans step up kind of in complexity based on the amount that are allowed. And when you talk about having employees, providing a simple IRA or a 401k for your employees can be a pretty big deal. With how competitive the labor market is, it's important to think about whether or not you should be providing or can be providing retirement benefits. And if you haven't already started one, there are pretty good tax incentives that are out there for small businesses that want to create a employer-sponsored retirement plan and incentivize their employees to contribute. So definitely a good time to be looking at those and taking advantage of those, but lots of different options on that front. And then I could talk about anything else. What's your next question, I suppose, before I ramble on some other things that came to mind?
So I think if you want to cover anything relative to financial planning, my next question is really just, I'm sold on the idea that I need a team because I want to focus on my art. I want to focus on the mission of my nonprofit. And I want to be successful. So I want to engage folks like you all. So when do I need to hire you all? And what do I need to consider as I'm sort of shopping around for the services that you all provide?
So,
but if you want to, before we get there, Jess, if you want to add anything else, please do.
Okay, sure will. So I like the question, and it's a difficult one to answer as far as when you need what type of service provider. Obviously, for something like business formation, it's important to have a good idea of what that structure is going to be. So you're going to need some help on that if it's not just you by yourself. Any level of complexity that an area of expertise that's outside your own, it's good to seek help. And I often position myself, or people come to talk to me first because I have their retirement assets, and those are the ones they're thinking of using for starting a business, or they're just got laid off or changed jobs and they're looking for a side hustle at that time. So having people that you trust and can refer other professionals to you, I think is important as you need them. To kind of go into like a nonprofit and a business perspective on when you might need to invest or might need a retirement plan, that has a lot to do with profitability, making money, having income that you would prefer to defer, or extra wealth, money that you don't need. And the thing I stress with anybody is financial planning is mostly about time frame. If I'm going to have this extra money, when am I going to use it? So it's not uncommon for somebody to say, geez, I've got a year before I need to buy this business thing that I need, whether it's a building or new machinery or a new vehicle, whatever. And they'll want to know what return they can get, especially before the start of this year where the market is down. People were really excited because the market had been going so well for so long. It seemed like you really couldn't miss in investments. But I always caution people, you don't want to invest money that you're going to need in the next few years, because it takes time for a downturn like what we're experiencing now to work its way out. So I always caution people figuring out time frame for any additional money you have is the biggest kind of consideration before you decide, do I need a retirement account? Do I need to invest this in some other type of investment? Because that time frame is going to dictate what types of investment vehicles you can use. So lots of different considerations on financial planning. I'm excited to get some other perspectives, but definitely I would say that figuring out your time frame and finding somebody you trust is important. You kind of asked a question about how you shop for these people. So if you don't already have a financial planner, CPA, attorney that you work with, it is important to speak with people you know. People in similar line of work can be a great source of referrals. Who do you know that works with people like us when you're talking to that other person? I always emphasize working with a fiduciary when it comes to financial planners or investment advisors. A fiduciary, it just means they have to put the interest of their clients first, avoid conflicts of interest wherever they can, and if they can't avoid a conflict of interest, to disclose that conflict of interest. So working with a fiduciary, I think, is one of the most important things, and finding them can be difficult because there's lots of people that are not. So it's always important to ask when you're interviewing or when you're talking to people. And if somebody's referring somebody that they're not sure is a fiduciary, it's okay to ask the professional if they're a fiduciary.
Great, Karen. Why don't we kick it to you next? So what qualifies a great bookkeeper, and what should I be thinking about when I'm shopping around for your services?
Well, I would definitely ask your fellow artists for recommendations. There's a lot of sketchy bookkeepers out there that can make a mess of your books in no time at all. So I would ask for recommendations, and I'm a big proponent of having a CPA do your taxes and have a lawyer help you get your entity set up. And there again, ask your friends and fellow artists for recommendations, who they use.
John, what are your thoughts on this?
I think that as far as finding somebody, a lot of the stuff that we're talking about, it's great if you have somebody local, but it's nothing that you need a local person for necessarily. I think one of the things that's beneficially come out of the pandemic is that, a lot of people are more available by Zoom or by FaceTime or something else. So definitely have a face-to-face with your bookkeeper, your accountant, if your advisor, anybody who's on this team, just to make sure that you can put a face to a name. But when you're looking for somebody, find, my first point is find somebody who what you're asking them to do is the main part of their practice. There are not every accountant prepares tax returns, and it's really important to remember that when you go to somebody that's you're going to somebody who prepares the return. I think Caleb mentioned that nonprofit returns are a special kind of return, and they're a different document, different everything. So I'm not sure if that's one thing that falls in your practice area, but go to somebody who, if you have a nonprofit, make sure that that's part of their business, that they're preparing that, and same too for the attorney. Make sure that drafting nonprofits is something that they do as part of their main practice area. Going to a criminal law attorney may not be the best option for making sure your business gets set up the right way. And so making sure that you go to somebody who, like I said, is a transactional attorney, or who does the business planning or this area more frequently. The second part of what I'd tell you is that really you gotta find somebody you like. I think that this is, I don't think picking, any of these folks that's going to be on your team is any different than, finding a mechanic that you like and that you trust. I mean, you're going to be paying these people money to do services for you. I like to, when I work with my clients, and I know this is the same for every single one of us, we work for them, not just in this year, but in the next year and 5-10 years down the road. They're lifelong clients that we hope to build relationships with. And that means that you're looking for somebody who's going to be a part of your business, whether, more engaged like the bookkeepers and the accountants, or maybe when things need to change, or hopefully not, but when things might go wrong when you have to talk to the attorney. But, you're looking for somebody as part of the team that'll be on that team for quite some time. So, just like your mechanic, make sure that the person you're going to, you can talk to, that you like to meet with. It's not a pain. There's a lot of hard things about starting your own business, and the team that you set up to help you shouldn't be one of them. So make sure you like who you end up hiring. But really those two things, making sure that you go to somebody whose main practice area is doing what you're asking them to do. And then finding somebody you like. That's really the big two takeaways.
Great. And Caleb, you get the last word today.
All right. Yeah, just to kind of echo what John said, it's important to have somebody that you trust that has been recommended to you. As he mentioned, especially for nonprofits and stuff. I mean, if somebody you can go to one of these little tax places that pop up come January every year, and then they're closed for the rest of the year. They're going to be doing, a lot of 1040s, which is individual tax returns and things like that. But they're never going to really get to know you, right? Like they're kind of just there on a transactional basis. And so if this is something that you're passionate about, that you are, basically want to be your goals, your career, your life, essentially, like you want somebody that's going to be there, all year at least, right? And so if you've got questions or anything like that, and so again, for like nonprofits and stuff, I would definitely recommend, a CPA a firm that does 990 returns, because they are very, very, very different than any other tax return that we do. As far as I guess kind of the timing question as to like when you would need these things. I mean, it kind of depends. If you're basically starting a business from scratch and you're putting $100,000 into it to get things up and running, right? You're going to want to have all of these things lined out from the get-go. And so before you even start generating any revenue, before you start basically filing anything, I would talk to an attorney. I would talk to a CPA, a bookkeeper. I would get all that stuff lined up beforehand, because it's going to be a lot easier to get everything kind of lined up and set up the way that you want it, or the way that it's going to work out best for you if you do it that way. If it's something where you're kind of just doing art on the side and it just kind of evolves and grows, I mean, you're going to want to start talking to somebody when you start seeing, some decent revenues for sure. And so, because we want to get that thing kind of set up and split apart if it's going to be a legitimate business for you. And so, it kind of depends, I guess, as far as like your personal situation and things like that. But I would definitely, the sooner the better as a general rule, right?
Well, wonderful. On behalf of the Wyoming Arts Alliance, our members and our partners, including the Arts Council, represented by Amara here today, I want to thank you all for the work that you do in our state, the support you provide to our musicians, our performers, our culture bearers, our artists. I feel much more confident after this session today in knowing that there are experts out there who do work with arts and culture professionals who can give us support and assistance. And I look forward to seeing you all out there on the road at arts events and exhibits throughout the year. Thanks so much. And for those of you that are watching, these programs are supported by our partners and members. So if you would like to click on the membership tab, we have memberships beginning at $25 a year, and we would love to add you to our membership log. And with that, feel free to scroll down. We have a wonderful catalog of videos. One I mentioned earlier is building a luck circle, which is a fantastic concept that you might embrace. But please scroll through and take advantage of all of the expertise that these folks are pouring out for our arts and culture community here in Wyoming. And with that, I bid you all a fond adieu. Thanks so much.
Thanks.